Good morning and welcome to our workshop from Trend Signal for the week starting the 7th of October. This is our first workshop of the week, so as always we'll focus on news and events and what we can expect this week. But before we do that, just a quick review of last week's data. FTSE, that was down about 60 points, just under 1% on the week. Dow, that tumbled a bit more, about 1.2%, about 180 odd points. S&Ps were unchanged to slightly lower. Crude, that rebounded a little bit after some sharp falls, up nearly $1. Gold, that was down $26 in here, just over 1%. Currencies, the dollar's sort of having a mixed week really. The euro was up a third of a cent against the dollar. Cable, that was down quite sharply, about 1.25 cents lower, that's nearly 1%. And the yen, that's been rallying a little bit against the US dollar, is up 80 points or 0.8%. So the news overnight, pretty much all down to the political impasse in Washington over this debt ceiling. We're now experiencing this partial government shutdown of non-essential staff, which is costing the US economy, according to reports, about $10 billion per week. The knock-on effect of the world's largest economy taking this to the last minute is there to see. If we look at some headlines here, market toil and amid US government shutdown as a headline from the FT. Market watch, stock futures tumble as budget stalemate sets in. I think really, as we mentioned last week in our workshop, that the markets seemed fairly calm and unmoved by this, but I think as we approach this 17th of October, which is the date when $30 billion needs to be repaid maturing T-bills, it's likely that if the debt ceiling hasn't been raised by then, that you will have a default, a technical default. There's no problem with the US raising capital, but they're choosing not to do it and arguing over it in the Senate and Congress. So, but nevertheless, it is a default if they can't repay their obligations. So the news overnight, apart from that, sort of vaguely bearish really. There's been a delay in labour reforms in Japan. There's been a cut by the World Bank in the East Asia growth forecast. So a little bit of negativity, but the equity markets have really taken a tumble first thing this morning. FTSE off sort of 40, 50, 60 points at one stage. S&P's sharply lower prior to the opening. Might have perhaps over-egged it initially, I think, but certainly I feel that markets will price in more the risk of a default as the stalemate seems to continue in the US. Data last week was pretty sparse actually due to the government shutdown. We lost our non-farm payroll data. The Bureau of Labour Statistics unable to get the data out. We have been told that it will be delayed, and it does take between 2 and 4 days to collate the data, so they need to get back to work and then collate the data. So it is important. It's important for the markets because the market depends on data for its lifeblood, as it were, and for the Federal Reserve. They need it to gauge exactly how well or poorly the economy is performing. Let's go on and have a look at the data coming out this week. There's not a lot of data early on in the week actually. I mean, our first really important data point, we've got manufacturing production here in the UK. We've had an insight into that last week already with the manufacturing PMI, so that will be important to anyone trading sterling crosses, the FTSE, and obviously gilts. But we really get on to the real meat of the week, really, with the FOMC minutes on Wednesday at 7 o'clock in the evening. Very, very important. The last time the Fed met in September, we were all expecting this news about the tapering, and we were really surprised when the Fed decided not to taper, which really went against the consensus where people were expecting anywhere between 5 and 15 or even 20 billion in tapering. So we need to find out exactly what was said, who voted to do what, and find out if the call was close or not, and we'll find that out when they publish the minutes on Wednesday evening. If it was particularly close on the vote, it could lead to further speculation that the tapering will take place fairly soon. But I think in light of the political problems in the States, I think the likelihood is that the Fed will definitely be holding back, because this is damaging the US economy with this debt ceiling problem and the potential default looming on the 17th of October. Other than that, other key events this week, We have Australian unemployment data, if anyone is staying up in the middle of the night to trade. Aussie data comes out at 1:30 in the morning, but the real interest to us on Thursday will be the interest rate decision from our own Monetary Policy Committee here in the UK. We are not expecting any news at all, really. Mark Carney, the recently appointed Governor of the Bank of England, does not see a case for more QE, he said in his last meeting. But having said that there's forward guidance in August, they will keep rates down, and that could lead to speculation that they may make some changes, but we don't think in this particular meeting. So we have a statement as well put out by the MPC at the same time, but that all happens at 12 o'clock. The next bit of data, weekly unemployment claims. We don't get non-farm payroll, but we do get the weekly unemployment claims. They've been doing okay just recently, but as we saw last week with the ADP data last Wednesday, the monthly data has disappointed. The consensus last week, because the ADP was any data we got last week in the US, and it was disappointing, and I think the markets are pricing in a not too special number when the Bureau of Labour Statistics managed to get its act together and publish the data, whenever that might be. We then have, well, nothing really too much. I mean, the most important data after that, we still will get the University of Michigan consumer sentiment number, and that comes out on Friday at 2:55. I think it's a very important number. These consumer sentiment numbers are all a great leading indicator. It tells us how the economy will perform in the future. Consumer sentiment did take a little bit of a knock. Rising long-term rates have pushed up the cost of mortgages, etc., and I think there's less confidence around what's going on, and I certainly think in light of the impasse in Washington, that might be reflected a little bit in the consumer sentiment numbers. But closely watched, that comes out at 5 to 3 on Friday. That's it for the day. We reconvene again on Thursday at 8 o'clock. In the meantime, good luck with the trading, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.